because Kevin Johnson, I've known him for 20 years, and he's a man of his word. Between his digital initiatives, his execution improvements, the partnership with Uber Eats, and his buyback, Starbucks has been able to deliver 2 excellent quarters in a row. Remember that $25 billion the company told us it would return to shareholders? As of March, they've already gone through $14 billion, and they bought a ton back in the low 50s. And they announced another $2 billion accelerated buyback on top. Remember, they got all that money from Nestle's. This man, I mean, I've known there's an advantage to being around for a long time. I knew how great this guy was at Juniper. I knew he was money. Then last month, the stock experienced one last pullback from 80 to 75. As the China fears heated up, Starbucks is the largest coffee chain in the People's Republic, which is a major source of growth for the company. People are starting to talk about how Luckin, which just came public, is going to hurt them. But the stock has shrugged off those worries. And the Chinese consumers, they keep coming back regardless of the trade war. I think Starbucks should never have sold off so hard in the first place last year, which is one reason why the stock has had such a fabulous winter, as management just keeps delivering and delivering. Wow, the numbers in 2019 so far so good. Kevin Johnson deserved the benefit of the doubt. I'm glad we gave it to him. And while I'm hesitant to pound the table all the way up here, maybe more on that later, I absolutely think it's worth putting this one on your shopping list. Maybe on the hope that we get another pullback, perhaps because the trade deal breaks down, right? All this trade talk, we could get an opportunity here. All right, only the weakest, please. How about Dunkin Brands, the parent of Dunkin' Donuts? Let me go over here. This one's a little different. Dunkin' stock has been moving up steadily for years, as this is a terrific regional going to national story. There used to be a lot of these in California. See, not that long ago, Dunkin' was mostly a Northeastern brand with some exposure to the Southeast and the Midwest. Now it's a nationwide brand. They've also been expanding what they sell, going from coffee and donuts to more of a full-service breakfast outfit. However, last year, the company drew the attention of some high-profile skeptics. And take a look at this, because this is what some short sellers can do to your stock, too. Not that the stock wouldn't be headed this way, but they act as an accelerant on the downside. Roughly 14 months ago, James Chanos, he's a legendary short seller, I've known him for years, announced that he'd been shorting Dunkin' for about a year. His reasoning: Chanos said the stock was overvalued and also called into question the company's asset-light, franchise-based business model. While the company reported a solid beat and raised quarter in October, the stock sold off hard, along with the rest of the market, in November and December, okay? But then it came roaring right back. And so far this year, Dunkin's has surged higher and higher based on a series of very good numbers.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.